Hey, what's up everybody? This is Taylor from Simpler Trading and this is the weekly Q&A video. So, I'm taking these questions from the comment section, from Twitter, from Instagram, from email. One of the bigger questions over the last handful of weeks, obviously, as the market has been a little bit volatile, is how do we go short? When do we go short? What are we looking for when we want to go short? So to answer that question, I got a couple of key things here for you. We're going to talk about the volatility index, which of course does play a big role. We're going to take a look at the structure of what we want to see from the market, as well as a few indicators, the squeeze histogram, the stack moving averages. So let's get jumping right in. We ain't going to waste any damn time. So, when we're looking to short, one of the most important things to take into consideration is the volatility index. More importantly, it's coming to the realization that usually when the VIX is trading under its daily 21 EMA, so that's the orange dotted moving average here, when the VIX is trading under the 21, it's usually pretty smooth sailing for the market. You know, the market's natural tendency and desire is to continue to trade higher. And when VIX is kind of dead, trading under the 21, it's typically what we see. So, for the purposes of shorting the market or shorting a stock, the best time to kind of switch over from looking for long positions to looking for shorts is when the VIX is pumping and when the volatility index is trading above its 21 EMA. So under the moving average, pretty smooth sailing once you get that big spike in volatility. Very much like the one that we just lived through. Now the environment is getting a little bit sketchy. There's a little bit of panic. There's a little bit of fear in the air. That's when you want to start looking to go short. So typically, VIX under the 21, shorting can be a little bit of a difficult proposition. VIX spiking and rallying above the 21 to the upside. Now you got a better environment for those potential shorts. As far as the indexes go, and just the market itself, I like to mainly look for shorts, again, when the market itself is trading under that 21 period EMA. So when we're above the 21, of course you can look for short opportunities, but keep in mind, the path of least resistance is typically to the upside. So when the market is trading above the 21, we typically move 2 to 3 ATR to the upside, and then you revert back to the mean. You can choose to try to short that move. My preference is, let's book gains on our long positions. Let's wait for the pullback. Then we're going to get long again at the 21 and play the move back to the upside. It's just the opposite when the market is trading under the 21. When we're under the 21 and then you have the bearish momentum on the histogram, it's just the opposite. We're going to push a good 2 to 3 ATR to the downside, and then we're going to rally right back to the 21. If we're not closing above that moving average, you get rejected and another leg to the downside. All right, so we got a chart of the Qs here, 21 EMA, and then we have the Keltner channels measuring 2 ATR, average true range moves, away from that 21 EMA. So remember, when volatility is dead and the VIX is trading under the 21, and when the market is trading above the 21, and you have stacked moving averages, stacked positively, and you have a lack of bearish momentum, think about the natural ebbs and flows. We're looking to get long at the 21, and we're looking to take our profits at that 2 ATR extension. You get the pullback, we're looking to go long again, and just rinse and repeat. Rinse and repeat, rinse and repeat, rinse and repeat until ultimately the environment changes. The environment changes with the indexes trading under the 21, with the volatility index spiking above its 21. Once you lose your stacked moving averages, you're losing that momentum. You're losing that solid backbone. Then you sprinkle in some bearish momentum on the histogram. There's your recipe for an environment where you can find some nice short opportunities. So it's a simple checklist. VIX above the 21, indexes under the 21, no more positively stacked moving averages, and the bearish momentum, well, that's just your heads up that the path of least resistance probably going to be to the downside. So that's what you're looking for as far as the bigger picture environment, and that's the checklist. VIX above the 21, indexes under the 21, no stacked moving averages, bearish Momo on your histogram. So that's the bigger picture you're looking for. But then the next key is to pick your spots wisely. So again, when the market is pumping higher and volatility is low and everything is smooth sailing, we want to get long at the 21 and we want to sell our profits into strength on that 2 to 3 ATR push away from it. The game doesn't change and we're looking to short. It's just the opposite direction. We do not want to be opening short positions and looking for further downside once we're 2 to 3 ATR under the 21. Because at that point, you're fighting against that growing probability. And you're literally getting short. At the very same time, you got a growing probability, we're going to rip right back up to the 21. And again, you try getting short, hit 2 to 3 ATR to the downside, and you're getting your teeth kicked in as the market reverts back to the mean. So we got to pick our spots wisely. So when you have VIX above the 21, the indexes are under the 21, moving averages are not stacked positively, bearish momentum on the histogram, we want to look to short the market at the 21 EMA, and then we want to cover our shorts and book our profits once we're 2 to 3 ATR to the downside. Typically, big mama market rips right back up to the 21. If you get rejected, we're looking to go short again, and then we're looking to take our profits at 2 to 3 ATR. The day will come where you're back above the 21. You no longer have bearish momentum, and the volatility index is once again back under its 21. That's when potentially you take your foot off the gas pedal a little bit as far as looking for short positions. But as far as the environment and as far as the structure of entries and exits, it's the same exact thing as far as those natural ebbs and flows. Initiate your position at the 21, book your profits at the 2 to 3 ATR extension. It's the same thing. Short at the 21, book your profits at the 2 to 3 ATR extension. Short at the 21, rinse and repeat. So in the options room over here at Simpler, over the last handful of weeks, we've just been milking this kind of simple mindset. Short at the 21, lock at 2 to 3 ATR. So we get the nice push here a week ago, we get rejected, so we're selling call credit spreads on the Qs. We're selling call credit spreads on Amazon. Rejection, rollover. Once we hit the 2 to 3 ATR, we're booking those gains. So those are the things that I look for as far as, when is it time to short and where am I looking to initiate those shorts? It all starts with the big picture. If VIX is just kind of dead in the water under its 21, typically, not always, but typically, the path of least resistance is going to be to the downside. Once you get these typically short-lived, but once you get these spikes of volatility trading above the 21, the environment's changing, you can start seeking out some short opportunity. And once those indexes, once they're dropping below the mean, got some bearish momentum coming in, y'all know the drill. So that's the question of the week, and that is the answer of the week. It all starts with the environment, volatility, the indexes, check out the bearish momentum, see if you still got stacked moving averages, and then just pick your spots wisely. So hopefully that gives y'all something to take into consideration, and I look forward to talking to you in next week's video. Peace out. I almost forgot. In the description of this video, there's a link where you can sign up and download a free copy of my high probability entry and exit trading guide. You can also get your name on the list for my upcoming newsletter. So check that out in the description of the video and have a great weekend.